Assalamualaikum. Welcome to the class of accounting. Girls, today my topic is balance sheet. Before proceeding to the topic, to the description, I would like to give you the introduction of the balance sheet. What are the main contents that are required to form the balance sheet? Yes, first of all, this is the name of the chapter, the partnership formation, in which you have to prepare the simple balance sheet. Partnership formation, that we have the two or more partners, and these partners are forming their business by having their assets, liabilities, and capital. We have five nature of accountings named as assets, expenses, liabilities, revenue, and capital. We can say that AELCR. Another thing, we have the examples of assets over here. We have two types of assets, the current assets and the fixed assets. The life of the current assets is within the 1 year. It means we have to utilize the current assets within the 1 year. Here are the examples. The examples are cash, account receivable, office supplies, merchandise inventory is also called stock, opening stock and the closing stock. Then we have prepayments are the prepaids, short-term investments. It means it is the investment which is during the year. Then we have note payables and note receivables and bill receivables. These are also our receivables. Another, we have the fixed assets. The life of the fixed assets are more than 1 year. Examples included land, building, machineries. Like all such assets have life more than a year. We are not purchasing it on daily basis. Furniture, fixtures, equipments, computers, and vehicle. Another thing, we have the examples of liabilities. The liabilities, again, having the two types, the current liabilities and the long-term liabilities. Here we have the example of current liabilities, named as accounts payable, which is also termed as creditors. Then we have payables and unpaid expenses. It means it is expense, but we have to pay it. We did that expense and now we have to pay it. Then we have note payables, bills payable, unearned income. It means it is that income which is not yet earned, but it is your income. Advance received, it means you have received the amount, but services are not yet paid or not yet served. Then we have bank overdraft, the negative balance of the bank. Short-term loan, again, the life of the current liabilities is within the 1 year. That's why it is called short-term loan, which is usually for the, you can say, months or weeks. Yes, another is your long-term liabilities. The long-term liabilities based upon the long-term loans, mortgage payables, usually on house buildings and all such. Then we have bonds payable. Bonds payable we will discuss further in the next chapter, in which we will discuss the issues of debentures and shares. Yes, capital. Capital is the owner's equity. We represent it by capital C. Here we have the owner's equity or the investment. If I use the singular of the capital, it is only the owner's capital. And if I talk about the equities, it means liabilities plus capital. It is a plural in which the liabilities is also add up. Here, the accounting equation balance sheet is based upon totally on accounting equation, and you can also set so that accounting equation proves balance sheet. Your assets is on the debited side is equals to the sum of the liabilities and capital. Assets, it's if 50,000 and your liabilities if 10,000, then definitely your capital will be 40,000, because 10,000 plus 40,000 is equals to 50,000. So you can say assets is equals to liabilities plus capital. Another term which I'm using over here is revenue. Revenue minus expenses is equals to profit and loss. Revenue is your income from which you will expend the amount to get the profit and loss. Yes, very simple format. First of all, you have to write the partnership, the name of the firm, then balance sheet format as you are preparing the balance sheet, then A, B, company, the name of the firm over here, then balance sheet, which you're already preparing. Then it is as on December 31st. Here you have to mention the year like 2019 or 20. Then we have two columns, assets on the debtor side, liabilities and equities on the creditor side. In current assets, we have cash, bank, account receivables, less allowance for bad debts. Then you will get the book value over here. Remember, you also have to less allowance for bad debts from account receivable to get the book value over here. Then office supplies, merchandise inventory. Merchandise inventory, only the closing merchandise inventory will be treated in the balance sheet. Prepaid rent, and this is your total current assets. And fixed assets, we have machinery, equipment, this is building, this is the fixed assets, and we less the allowance for depreciation to get the book value of these fixed assets. Another one, land. Land is the only fixed asset which is never depreciated. We never charge allowance for depreciation on land, so we will write just directly the amount which is given in the question. To add current assets and the fixed assets, we will get total assets. In the creditor side, we have liabilities. The liabilities are accounts payable, salaries payable, and bills payable. The total is current liabilities. In long-term liabilities, we have only loan, and when we add current liabilities and loan over here, we will get the total liabilities. Yes, in equity section, we have, as we are preparing the balance sheet for the partners, so we have three partners, A, B, and C. So we will write the capitals of these three, and then we will add and write it down over here. To add current liabilities and partners capital, we will get total equities. Suppose if you are preparing the balance sheet of a sole proprietor, then you will write only a capital over here and amount in this column. This is your simple format of the balance sheet. Hope it will help you out in solving your assignments and further question. Thank you so much.